One very exciting opportunity in the small cap space is Zeta Global Holdings. Their ticker symbol is ZETA, and they have a market cap of $4.3 billion. dollars. And over the course of the last month or so, this stock is down by almost 20%. And Zeta checks all the boxes for a company that you would want growing in the AI space. They are an AI cloud based marketing company that helps larger companies market across many different channels. Basically, they're a tool that organizes marketing campaigns so that larger companies don't have to organize these campaigns on individual marketing platforms. And now Zeta is even available on AWS. This is really just a step in the right direction. A lot of companies use AWS, so Zeta being on that platform is just another benefit. So now these companies, if they want to use Zeta, they don't have to go to Zeta's individual platform. It's already built into AWS. It integrates better with a lot of data. So overall, this was a good move from Zeta and should help expand their business. But this is a recent partnership that really isn't going to have a big effect on their next earnings. And that's because Zeta's next earnings announcement is expected on Tuesday, November 4th after the market closes. And right now, analysts are expecting the company to put up 18 cents of EPS. That is a slight increase year over year from 16 cents of EPS in 2024. And for revenue, they're expecting the number to come in at $327.7 million for the quarter. That's an increase of 22% year over year from putting up $268.3 million in 2024. What we will see is these numbers are likely very low because they're based off estimates that the company provided during their last earnings report. They always tend to beat on their top line numbers. This is something that the company is very proud of. So they provide very low expectations for revenue when it comes to guidance in the following quarter. And EPS, this is a little bit more of a hot topic for me. What we have seen from this company is they have consistently provided high levels of stock-based compensation, and that's something that they really need to get away from, and investors are going to be paying very close attention to. And here you can start to see what I'm talking about when it comes to their revenue numbers. During Q2, they put up revenue of $308 million. That was a 35% increase year over year. And for guidance, they were only projecting $328 million of revenue, which again is that 22% increase year over year. What I actually think this company is going to do is somewhere closer to 33% growth year over year. That would be a revenue number for the quarter of around 355, maybe $357 million of revenue. If the company comes through and only puts up top line growth of 22%, or really anywhere in that low 20 range, 20 to maybe 24% growth year over year, that would be concerning for investors. Because one thing Zeta has talked about during their most recent earnings report is a target for their 2028 numbers. They want to get to revenue of $2.1 billion by 2028. That means they need to grow their top line at a compound annual growth rate of 20% for the next few years. From 2021 through 2024, the company grew their top line by 30% year over year. That is a great benchmark, and I don't think that is going to continue all the way through till 2028. But what they need to do is over the next 1 to 2 years, grow in that 25 to 30% range, and then maybe 2028, they can see a little bit of a pullback into that 20, maybe even down to like 17% growth for their top line numbers to achieve this 20% target. However, if we see those numbers fall off sooner than expected and growth start to subside, that could be concerning for investors on whether the company can actually reach their 2028 target. But for me personally, I think that the company is going to be able to grow their revenue by around 33% year over year in this upcoming earnings announcement. However, what I am paying more close attention to is what is going on on with stock-based compensation. This is a company that has had a problem with diluting investors. In 2024, they had a dilution rate of 15%. That is a massive drag on the business. In 2025, they're anticipating that this dilution will come in between 4 and 6% and then fall even further in 2026 to between 3 and 4%. This is a good move in the right direction, and investors will want to see this continue into the future so that we can start seeing their bottom line numbers grow. A lot of people talk about buybacks and the positive impact that they have for investors because basically it's just returning money to investors. The reverse is true for dilution. Dilution, what it is doing is it is causing you to own less of a company's earnings. And at the end of the day, we talk about this over and over again. Stock price follows earnings growth. As earnings grow over time, a stock will go up over time. The same thing is true if a company is diluting investors. If they are diluting investors, then at the end of the day, the stock price is going to suffer and investors are basically taking that hit. What we can see is that over the last 2 quarters, Zeta has diluted investors by over 20%. And even prior to that, they were diluting investors by around 18%. So this is a company that right now has a problem with stock-based compensation. The good thing is the company is aware of this concern from investors and they've proposed a plan on bringing these numbers down over time. So it will be good to see if this trend continues and we could see some of the stock-based compensation start to subside. Like I mentioned, currently analysts are expecting 18 cents of EPS in this quarter. I think that's probably reasonable for the company. What we have seen over the last few quarters is analysts have been fairly correct when it comes to EPS numbers. They've only been off by around 12, 13% during the last quarter, and then been off by about 2%, 4%, and then 11% back in December of last year. So they've been fairly correct when it comes to EPS numbers. I think the only factor that could really affect this in a major way is if stock-based compensation drops more than analysts are expecting and we see a rapid increase in EPS numbers. I don't anticipate that that is going to occur during this quarter because I think the company is a lot more focused on growing their top line numbers. But this could change over the next 1 to 2 years. Zeta right now is very focused on their top line numbers, and this makes a lot of sense because there is a lot of potential for growth. However, if they shift their business to focus a little bit more on their bottom line numbers, we could see massive growth for their EPS. And right now, their forward P ratio is relatively low. It's sitting at a 22.32 for a company that is growing their top line by over 30%. And their PEG ratio, which is based off earnings growth over the next 5 years, is only sitting at a 0.94. So right now for 2025, analysts have an EPS estimate of 66 cents. For 2024, they put up 65 cents, so this would be basically no growth year over year. And then in 2026, they have EPS coming in on the low end of 68 cents. Again, this is very low growth. I think the way that this occurs is Zeta continues focusing on their top line numbers. They don't really curb any of their stock-based compensation, so we see EPS numbers come in low. And at that point, if they're trading at a PE ratio similar to where they're trading at now of between a 20 and a 30, we could see a stock price between $13 and $20 per share. I personally don't see this as being very reasonable of expectations from analysts. I think they're going to grow their EPS numbers a lot quicker than this low range. But it's still important to consider a bear case scenario. For a base case scenario, analysts have EPS growing to 87 cents in 2026. That would be an increase of 31, almost 32% year over year. At that point, if they're still growing their top line by around 25%, this stock should command a valuation between a 25 and a 35. That could result in a stock price between $21 and $30 per share. But now let's say that Zeta comes through and they're growing their top line numbers by around 25%, and we see them continue to focus more and more on their bottom line numbers, which translates to very strong bottom line growth of almost 70% and EPS of $1.12. that would put their current PE ratio at a 16. That would be very unreasonable for a stock that is growing that quickly. I think they could easily trade between a 35 and a 45, and that would result in a stock price anywhere between 40 and $50 per share. When I look at these three scenarios of Zeta basically not growing their bottom line numbers at all and top line growth falling off, I would put that percentage of happening at about 15%. For Zeta to come through and grow their top line numbers at, let's say, around 30%, as well as bottom line numbers growing by 70%, I put that at about a 25% chance of happening. I do think there's a higher likelihood that they would achieve these results than these lower performing results, just because the company has already showed that they're going to focus on some things that should spur on some bottom line growth. Overall, I think 60% chance that they come in around this 87 cents mark. And that would put, again, their valuation somewhere around a 30. I think they could creep up to a 35. So my personal price target for the end of 2026 would be somewhere around $30 per share. I think that's reasonable for this company. And I think they could do that. That's almost a double up too, based off the current stock price. But keep in mind, I am just some random guy on YouTube. So don't buy a stock just because I talked about it. And I do own shares of Zeta. This is the YouTube portfolio. Right now, it's sitting at a value of just over $87,000. And within the portfolio, I hold 75 shares of Zeta for a market value of $1,300. I'm up almost 16% on this position. I'm considering buying more before earnings because last earnings, the stock did run up to around 21, almost $22 per share after they announced some very positive numbers. I think this quarter is going to be more of the same. Again, I am anticipating around 33% top line growth. I think EPS numbers are going to come in probably in line with what analysts are expecting. But of course, let me know your thoughts down below. What are your expectations when it comes to top and bottom line numbers for Zeta? Do you hold it within your portfolio? And what is your price target for this stock by the end of 2026? Let me know in the comment section. And while you're down there, drop a like on the video and subscribe for more videos like this one. And as always, have a wonderful rest of your day.